What are the top mistakes people make with debt? Ted is here. Let's begin.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Okay, Ted, welcome back. It's been a long time since you've been on the podcast. 1 week, I think. This is a weekly podcast. And last week we talked about what to do financially when you lose your job. Remember that podcast?
I do remember.
There you go. Ted just saw the script 30 seconds ago and only put his headphones on 5 seconds ago. So that's the level of prep we're doing here. So I got 3 rhetorical questions I'm going to ask you to start the show. These are, of course, rhetorical. They don't require an answer, but what the heck.
Okay, then.
So, did you know that our firm, Michalos and Associates, has filed over 73,000 consumer proposals and personal bankruptcies since we started this firm in 1999?
So that means we've helped about 250,000 people.
If you include, yes, the
dependents,
kid,
yeah, that's right.
Well, in fact, 11% of those filings were joint filings,
okay,
which is common in a consumer proposal. We don't do
is.
them in bankruptcies for various legal reasons.
Mm-hmm.
So that means there were 2 people involved in those filings. So definitely 81,000 people who have, had their name associated with one of our filings. But then you're right. When you extrapolate out, it becomes a lot larger than that. Okay.
Yeah, we don't count dogs and cats.
We do not. We do not.
Right.
I don't know why we don't. It's a good question. Did you know that today is our 9,765th day in business?
Today that we're recording
this?
Yes,
today that we are recording
this.
Exactly, today. So the listener's going to have to figure out, what day are they recording this? Of course, you don't know what day we actually started.
And is there a celebration? Do we have something in Latin or French for 9,765?
I don't even know how to do that in Roman numerals. So the point is that
we've been around for a while.
Exactly. Almost 27 years we have been running Hoyes Michalos.
We started when we were 10.
We did. And you were 11, I guess.
Right.
And you and I have met with tens of thousands of people. We've pretty much seen every possible mistake there is to make.
Pretty much.
So today, that's what we're going to talk about. So in your many decades of meeting with people with debt, what is the biggest mistake people make?
Are you sure you want to focus on mistakes? I mean, everybody makes mistakes. Mistakes happen. What's the scene in Forrest Gump? That's on his shirt. Oh, you just stepped. Anyway, don't go there.
We only do movie references from movies that are at least 30 years old.
It could be.
Yeah, I mean, you're right. Mistakes happen. Everyone gets into trouble. So perhaps you're right. We should start off with a more positive spin, which is mistakes happen. Don't beat yourself up on it.
Well, and if you focus on the problem, you're never going to get to a solution. So we want you to recognize that, okay, something went wrong. And if you want to blame yourself, you can. There's no real benefit to that. It might make you feel better for a little bit. But
right. And so the reason we are talking about mistakes today is not to push people down. It's to say, if I can recognize that, then perhaps I can avoid it in the future.
And whatever's gone wrong for you, we're certain it's gone wrong for somebody else. Yeah. Everybody's case is unique, but the facts are always similar, and we've seen a lot of it.
Everybody we deal with has more debt than they can handle. That is the common thread. So,
and I guess if we have to pick something, it's that they don't realize that that's the problem. So maybe that's the most common mistake, and that's one that's you don't recognize that you're already in trouble. You're in the hole.
And why is that? Is it because it builds over time?
Can't see the forest for the trees.
The frog in the boiling water kind of a thing?
You're so far into it that it doesn't occur to you that, hey, wait a minute, this isn't normal anymore. There's something wrong. I've got to find a way to change the paradigm.
Well, and you said that everybody's situation is unique, and I agree with that.
Yep.
But if we were to make up a person, it would
Joe
be
Debtor?
Joe Debtor. Let's call him Joe Debtor. That's a good name. We should copyright that. So it starts off, things are going good.
Right.
Because the only way you can possibly get credit is if somebody says, I will loan you money.
I trust you. You've done something right that's established enough credibility that I'm going to let you use my cash.
And the only exception to that would be your friends at CRA who do not actually grant you the credit.
Right. What's the term they use?
Involuntary debtor or something like that. Involuntary debtor, yeah. But if you owe CRA money in taxes, you must have had some income.
Right.
That's probably what happened. So things were going well, and then something happened, or maybe a series of something happened. Lost your job, got sick, expenses racked up, went through a divorce, whatever it is.
So you're talking all of this being $1 at a time.
$1 at a time. And so the first time I'm not able to pay my credit card in full.
Mm-hmm.
Okay, I make the minimum payment. It's not a big deal.
Right. I'll catch it up.
And then maybe next month I do.
Right.
Or maybe I don't. And then another month goes by and another month and another month. The vast majority of people we deal with have had these problems for an extended period of time.
Yes, it's very unusual that somebody comes to us and they've only been carrying the debt for 2 or 3 months. There's usually then a different kind of problem, and we're not going to focus on that today. But
yeah, I mean, I guess it's theoretically possible that I had to sell my house because I have to move, and I didn't. The housing market has crashed, and now all of a sudden I've got a shortfall of a couple $100,000.
Right.
That could be something that happens really quickly.
Yep.
But most of the time, it is $1 at a time over an extended period of time.
Right.
And so you don't realize that it's getting worse and worse and worse, and then it becomes boom.
Right. I mean, effectively, it's your new normal. So this is, I've made this change over such a long period of time that I don't recognize that I'm not where I started anymore.
So what then is the breaking point? How does it come to be that I was in this problem for many, many months, and now I finally realize, I got a big problem?
So it's different for everyone. About half of our clients realize for themselves that something's gone wrong, I'm out of control. The other half actually need some kind of an external push. So it's revenues calling you because you haven't filed and paid your taxes. You're getting collection notices. Somebody's issued a statement of claim against you. There's all these external factors, and half the folks that we talk to have to be pushed before they're going to reach out to us.
So a lawsuit would be an example.
A very good indication. Yep.
Collection calls, a wage garnishment.
Mm-hmm.
So you're right. And whether it's half or not, I don't know. We're making up numbers here, but.
Well, think of how much the practice dropped when we went through the pandemic.
Yep.
Because there was nobody pushing anyone. It dropped by 50%.
Yep. Well, so, okay, there you go. There's some stats there that we just made up that might actually be right. But yeah, there are some people who call me up and they say, you know what, I know that next month I won't be able to make my minimum payment, so I want to deal with this now.
Right.
Those are very proactive people. They've got budgets. They know what's going on. But you're right. For another chunk of it, it's like, well, yeah, I've been hiding and now they finally found me.
Well, and there's another element to this as well. Most people won't talk about their finances with family or friends. And when they finally do and they realize, hey, Bobby had a problem too, and this is what he did, maybe I should look into that.
Yeah, and that becomes the straw that broke the camel's back.
Right.
And it is different for everyone because in the last couple of months, I have had more than 3, 4, 5, I don't know how many people it's been, who have contacted me who have had their wages garnished for a long time.
Yeah, that one confuses me. That became the new normal for them.
Yeah, it's like, well, okay, I know I owe the money. They've gone to court. They've sued me. They're garnishing my wages. They're taking 20% of my paycheck, but oh well, at least they're not contacting me anymore.
And it may very well be that those folks don't realize that they have options.
That could be it too. And so when they finally do, they contact us. Okay, so I think one of the items high up on my list of mistakes would be waiting too long to get help. So you're talking about it takes a while to figure out you're in the situation,
right,
but when you do figure out you're in the situation, you then wait too long to get help. Do you agree with that? Is that something you see?
I mean, the hardest part of this process is recognizing you have a problem and then deciding to do something about it. So calling someone like us, it's just personally, it's difficult for people to do. But they feel so much better after they do. So it's
I think that's the biggest advantage is the stress relief. Obviously, you're dealing with your debts,
right?
And so there is the cash flow relief.
Well, and the logic of all this is pretty simple. So before you make the call, you talk to an expert. You don't really know what you're going to do. So the stress is, I'm in uncharted waters. I'm in a lot of trouble. After you talk to someone like us, well, now you've got a plan. So you may not be happy that you had to talk to us, but you're back in control. And that's what makes you feel so much better.
Yeah, like going to the dentist. It's like, well, I don't really want to go to the dentist.
Yeah, I got to go to the dentist tomorrow.
Nope. So then people will be able to figure out what day we're recording this.
Yeah, put a new crown put in.
If they know what day Ted's dental appointment is. It's you finally get to the point where, okay, I've got to deal with it. And I don't want to go to the dentist, but I know that once I'm done with the dentist, I will be in better shape.
Right.
And it's the same here. So,
but now you're triggering probably the second mistake, right? You go to the wrong dentist.
Well, we're going to talk about that because
okay.
you're exactly, well, in fact, let's talk about it right now.
Okay.
So what are you talking about?
Well, so The biggest single complaint after payday loans is there's a facet of our industry, they call themselves debt consultants, and they can advertise whoever they want, and they can say whatever they want, and all they're really trying to do is get you to pay a fee before they refer you to somebody like you or somebody like me.
Yeah, and you and I have been fighting against this for many, many years.
Many years.
And, to her credit, the superintendent of bankruptcy has taken some steps.
Mm-hmm.
It is now a requirement when you file a proposal or a bankruptcy that on the paperwork it is disclosed whether you talked to a debt consultant, and if you did, who it was, what their address was, how much you paid them.
Right.
So, okay, that's good. We're now bringing some disclosure to it. But has that stopped them?
It certainly hasn't. I mean, what we're finding now is that they're referring files to a specific firm for 2 or 3 months, and then they go on to the next guy before anybody realizes there's a problem.
Yeah, it used to be that these guys were kind of embedded in one firm.
Right.
So all our files, we send it to you, but then the superintendent has been cracking down. It's like, wait a minute, you're getting a lot of files from those guys. And even if they don't disclose that that's where the files are coming from, it's kind of obvious when you look at the file itself.
Right. And folks, don't get us, this isn't bitter, sour grapes from us. We don't care that they're referring to files elsewhere, because the first thing we tell people is you shouldn't have been paying anyone a fee before you see us. So we know we're not going to get that kind of work. It's frustrating because these are folks that are in trouble. You're in serious financial trouble if you're looking out to talk to a trustee, and you're being duped by somebody else to pay a fee that you don't have.
And it is extending the process, because if you go to these guys, they say, well, you got to give us $3,000 up front.
Mm-hmm.
So it's like, okay, so what am I going to do? I guess I got to take a cash advance on some of my credit cards, or I got to dip into my savings or borrow from my family or friends.
And it's going to take you now 2 or 3 months to deal with that.
Right. As opposed to, and maybe more, and as opposed to coming directly to a trustee, whether it's us or another licensed insolvency trustee, we get you in, we look at what the situation is. There are many people who meet with us, and within a couple of weeks, they've signed their paperwork.
Right.
Some people, it might be a few months. You got to do some stuff first. You got to get your house in order.
Here's the test. If anybody asks you for money up front before they've actually done any work, just hang up the phone and run away.
Yeah, I totally agree. And the reason, obviously, we're biased that you come to someone like us first is that the early advice means you've got more options, too.
Right.
If you are just starting to fall behind on your debts, and again, this goes back to the mistake about waiting too long to get help, then, okay, we've still got some time. Right. If your wages are already being garnished,
then we have to do something, and we need to do it quickly.
Because otherwise, it's going to cost you 20% of every paycheck. So the longer you wait, the more serious it can become. And so I think that's why pretty much, well, we hear it all the time, clients saying, I wish I had called you guys sooner. Like that's a very common a common thing that people say to us. Okay, I got another one for you.
Mm-hmm.
Is only making minimum payments, is that a debt mistake?
It certainly can be. I mean, the issue is this. When you're making the minimum payments, what you're really doing is you're paying the interest charges and maybe a little bit of your principal, maybe, but interest for sure. And so if you're paying the interest every month and you're not paying down the debt, how is this helping you?
So where would a case be where paying a minimum payment is, okay, that makes sense. It's not a huge mistake.
So it's a temporary cash flow problem. So the example you had earlier. So this is the first month I haven't been able to pay my credit card off. I'm carrying a balance. But I know 2 months from now is a 3 paycheck month, so I'll be able to clear it out and then it'll be fine. All right, that one you're not going to get too excited. You've made a conscious decision. I'm going to pay this credit card interest for the next couple of months. But that next couple of months turns into 6 months, 8 months, a year, and it's not just one card, it's 2 or 3. If you add up what you're paying these guys in interest, oh my God.
Yeah, so is it really temporary? So tomorrow you're going to the dentist. Presumably it costs money to go there. And so, okay, it's a one-time thing. I got to get my tooth fixed. I'm going to pay with my credit card. So I know that at the end of the month, I will not be able to pay the full balance.
Right.
But I know that over the next couple of months, I can pay it. So fine. I pay the minimum or whatever I can and move on. So I think that, I agree, that is really the test. That is this a temporary thing?
Is there a plan to deal with it?
Is there a plan to deal with it? And if there is, okay, no problem. You've figured it out.
We got to get a dentist to sponsor us.
Exactly.
We're bringing up this dental stuff a
So
lot.
what you can do, if you're watching on YouTube, just put in the comments there that you're a dentist and you would like to pay us a lot of money to sponsor a debt podcast. And you can hit the like and notification bars while you're doing it.
I'm going to guess where you're going next because I already mentioned them, right?
Go ahead.
Payday loans?
Yes,
Yeah.
because I think obviously a huge mistake is relying on really high cost credit.
Exactly.
And there is nothing higher.
Except for Guido.
But what's the difference?
Guido will break your fingers.
Really, what's the difference? So, I understand a mortgage is your biggest debt. So, okay,
that's your largest dollar debt, but it's
amount.
also the least expensive.
Right, because it's secured by a house.
Mm-hmm.
And then, okay, you got credit cards, which are pretty expensive.
Right.
But then, so they're not great. But then you get into the payday loans, which is really the
ridiculous interest.
The biggest mistake. So,
Yep.
again, is there, why is it a mistake? Well, I think you already said. It's just too expensive.
Yeah. The thing that always bothers me the most about payday loans is the people that rely on them the most are either the young, because they haven't established access to credit, or the very old. Seniors are a huge user of payday loans because they think they've got to make their payments on all their other debts. And by doing that, they borrow from these payday lenders, which is an even worse type of debt.
And the current cost in Ontario of a payday loan is $15 on 100.
Yeah, so 360%, right?
Yeah, so if you get a 2-week payday loan for $100, in 2 weeks you pay $15, and if you keep doing that for the every
forever and ever and ever,
for 26 biweekly period, that's a year. 15 times 26 is 360.
Is it?
Or
390.
300 and I don't know. You guys can do the math. And I know the payday loan people. That's not how you calculate interest. Yeah, it is.
It's exactly how you calculate interest.
At the end of the year, I've paid 15 times 26, and I only at any point in time had borrowed $100.
Mm-hmm.
So it's a massive interest rate. But it's worse than that,
right?
Because what you've done is started the cycle.
Exactly. I mean, we very rarely talk to anybody that started on this payday loan treadmill that has a way out of it other than coming to see someone like us.
So it, again, made back to your dentist example, because they're going to start sponsoring the show.
Big dollars.
Big dollars. So I've got to pay for my tooth tomorrow. I don't have the money. I go to the payday loan place. Right. I pay for it. Great. It's a one-time thing. And if I have a plan that I can pay it back with my next payday, great, no problem. But that is not what we see.
Right.
It's the exact opposite. So I did some show prep.
Some trenching?
From our Joe Debtor.
You're going to upset me, aren't you?
Yes. Okay. From our Joe Debtor study, and I'll put a link in the show notes to this. You can go to joedebtor.ca and read it all. 34% of our clients have payday loan debt. So
that's not surprising. Yep.
The average debt of those clients last year was $7,700.
So that means the total amount of all of their loans, and
right.
You're going to tell me that next, right?
Yes, the average number of payday loans that one of our clients with payday loans has is 4.3. So you don't just have one, you have 4. And why is that? Well, because in order to pay that one back, I've got to get another one.
Right.
But now I borrowed $100 here. Now I got to pay $115, so I get a $115 loan.
Right.
And then in 2 weeks, I got to pay back, I don't know, whatever.
Well, but according to this, you borrowed $7,700.
Well,
so in 2 weeks, you're paying back.
But you're right. But I didn't borrow $7,700 on day one.
That's true.
It grew and it grew and it grew. And we don't really call them payday loans anymore. We call them, high interest,
right?
Short-term loans.
Because we lump some less expensive ridiculous loans in there, right?
Well, they're still pretty. 47%. Yes, exactly. So you can go to that payday loan place and get a $5,000 installment loan,
right? And that's only at 47% interest.
Well, it's now 45? Has to be 35
right.
If you do the math the way the criminal code now says you have to do it. It's still wickedly expensive,
right?
And so you get one, you have to get another one, and then you have to get 2 to pay off the one, and it just goes from there. So it is, for most people, the last option, the last straw,
right?
Because we know that 89% of our clients who have a payday loan also have credit cards. So they got the credit card first, but they've also got other problems as well. Taxes.
Right.
About half of our clients who have a payday loan also have tax debt. And about a quarter of them have
student loan debt.
Right. So which came first? Well, it wasn't the payday loan.
Right.
It was probably the student loan debt, and then the tax debt, and then the credit cards, and then finally you get hit with the payday loan. So explain to us this cycle that we keep talking about.
So the payday loan is all about short-term relief, but long-term damage. I mean, it's you solve your problem today, but you create a much worse problem for tomorrow.
And that's the problem. And so you got to kind of game theory it out. If I'm getting this loan, do I have a plan to pay it back? And you should be asking yourself that about any kind of loan, credit cards, anything.
Right.
So,
well, and if something goes wrong, do I have a plan to pay this back? Right?
Even worse. So, okay, I've alluded to tax debt.
Right. That's the next one coming up.
So, okay, what's the problem with tax debt? I mean, the interest rate's pretty low.
Well, so the issue, it's 18%. So
not on
17?
tax debt, I don't think. No, I think it's the prescribed rate, which is probably 7 or 8 or 9% or something.
No, I think it's 17%.
Okay, so again, we don't do show prep here. So
anyway,
my point is it's lower than payday loan debt and credit card interest rate debt, but it is still a serious problem.
Right. The issue with income tax debt is that the government doesn't send you a notice every month. They don't call you every month saying you're behind. In fact, it often takes the government a couple of years to realize that you're behind in your taxes. Mm-hmm. And so this debt is sitting there festering. The whole squeaky wheel thing. Well, the government wheel doesn't squeak until it's broken. So.
Yeah, CRA doesn't know what your tax debt is until you file your taxes.
Right. They don't know that you owe them money.
Right. So if you haven't filed your taxes for a year, they might be calling you about not having filed your taxes.
Right.
But they're not calling you about the debt. So, okay, I incurred debt throughout the year. I filed my taxes in April. It takes CRA till May or June well, now it's the summer, so they're not working as hard. So maybe it's the following fall, kind of like the time of year you're watching this podcast now, that people are like, oh, wait a minute, you got tax debt in there, and they're coming after.
Well, and the crazy thing with tax debt is, so it takes them forever to realize it, but once they are on you, their powers are so much more significant than a regular creditor.
Like what?
Well, so a regular creditor, if you don't pay, they have recourse to send you to collections and then finally take legal action, so small claims court or superior court. CRA does it internally through tax court. They just send a demand notice to your bank or to your employer, so they freeze your bank account, garnish your wages. And it's much quicker.
Yeah, well,
once they get to it.
Exactly. It's like the elephant that's asleep at the corner of the room. It's been asleep, and all of a sudden it wakes up and tramples everything. Mm-hmm. So and I get this call 3 times a week or 10 times a week is a lot. Hey, CRA froze my bank account. Oh, okay. Tell me what happened. Well, when was the last time you made a payment to them? 2 years ago.
When's the last time you filed your taxes?
I haven't filed my taxes for a couple. Okay, well, that's why then. Right. So nothing happens, and then boom, the hammer comes down. CRA can be included in a bankruptcy or a proposal. Did you know that, Tim?
They certainly can.
Were you aware of that?
48% of our clients.
There you go. And so this is another big misconception.
Right.
Maybe it's a mistake that, I know I can't do anything about CRA, so I'm not going to do anything. No, if you go bankrupt, your CRA debt is included. You can do a proposal. There are some special rules, and you got to talk to us to make sure it makes sense.
Right.
But yes, you absolutely can. And just as an aside here, if you've got a bunch of debt and you're contemplating a bankruptcy and you've also got an RRSP,
you're not going to go here. Yeah.
So you should not automatically assume that cashing in the RRSP is the correct answer.
In fact, the government doesn't want you to cash in your RRSP. The RRSP is a policy where they're telling you set aside some of today's earnings for your future needs. And if you cash it out, there's a horrible tax hit on you for cashing it out, and you don't have it available for your future needs.
Which is why there's a special rule that says whatever's in your RRSP, except for what you put in the last year, if you go bankrupt, you still get to keep it.
Right. It's protected under the law. And the reason they're doing that is so that it's available for tomorrow. Otherwise, the government will have to pay out more in benefits, either CPP's fixed, but OAS or GIS.
Or any kind
whatever
of,
it is,
Ontario Works or anything else. So if you have a bunch of debt and you have money in an RRSP, then it might make sense to cash it in. It depends on the level of the debt and everything. But I would suggest you talk to a professional first.
The mistake that people make is that they liquidate these things before they talk to a professional. And then they find out after the fact, I didn't need to cash out my RRSP. I could have still had that money for the future.
Yeah. So you want to talk to us before you make that mistake. The other mistake I hear, people, we talk to them and you say, well, you know what, I think a consumer proposal would be the correct option for you given your situation. And they say, no, I don't want to do that because it's going to hurt my credit score.
Right.
Is that the most important thing you should be thinking about when you got a bunch of debt?
Well, so now this is it's the reverse of what we were talking about with payday loans. So payday loan, there's short-term relief, but you're creating a long-term problem. With filing a consumer proposal, you are going to take some sort of hit on your credit report, but it's a short-term hit that you can correct for the long-term game of all that money that you're going to save, the debt reductions, the reduced interest.
Yeah. So again, look at the big picture on it. Your credit.
And the other thing to keep in mind is the credit score is an indicator, but if you can't go out and get approved for new credit, that means you've probably got a credit problem. Or more importantly, you probably got a debt problem.
Right.
So it's not just what the score means. It's, are you credit worthy at this point?
Yeah. If you've got $50,000 worth of debts and you're having trouble paying them because they're credit cards and taxes and payday loans and whatnot, go to the bank and ask for a $50,000 consolidation loan at a reasonable interest rate.
Right.
And
see what they say.
Yeah. And if they won't give it to you, then it doesn't matter what your credit score says, you are not able to borrow.
Right.
So I don't think the credit score should be the thing you focus and lead your life based on. I'm a bigger believer in what's my cash flow each month and how does that all work? And then, of course, we talked about the cycle. If you're taking out new debt to pay off old debt, that's not good.
Because the new debt's almost always going to be at a higher interest rate, unless you're able to consolidate. But even then, most of those people double down, so they end up using the old debt again anyway.
And so the practical advice is cash or debit.
Right.
If you use that, then you're not incurring new debt. Whatever cash you've got, throw it against the
whatever you got left at the end of the month, start to pay down the principals.
So when we do a proposal, obviously we're negotiating with your creditors. Should you be doing that first? So in other words, you got some debts. Should you be negotiating with your creditors? And if it doesn't work, then you talk to us?
So sometimes that makes sense. It depends on how sophisticated you are and just how many creditors you have. So if you've got one credit card and a loan at a bank and you need some relief, then going in and talking to the bank probably makes sense. If you've got 6 credit cards, 2 loans, a payday loan, and income taxes, there's too many balls in the air. You could be the best juggler in the world. You're not going to be able to solve that problem.
Yeah, and it comes back, I think, to is it temporary or is it permanent? If I'm off work for 6 weeks because I broke my foot, but I'll be going back to work, then you call up the bank and say, can I defer a mortgage payment?
I need something
can I
for
defer
6
a
weeks.
car?
Yep.
Right. Absolutely. That's what you want to do. But if you're now at the point where there's no way you can even make your minimum payments, then
better reconsider.
Yeah, probably chatting with us is the way to go. Okay, so I got lots more stuff on my list, but we only have a 30-minute show here, so let's wrap this up. Okay. The entire podcast has been about practical advice.
Yep.
But I want you to kind of give me the quick summary, the quick takeaway of what we have discussed here today.
So first and foremost, you don't acknowledge or recognize that you've got a problem early enough.
That's a big mistake.
The problem is there, and until you actually say, yes, I have a problem, you're not going to deal with it. Well, then the second mistake is, okay, I've recognized I have a problem, but now I delay dealing with it. Either I'm afraid or ashamed or embarrassed. I know I've got something wrong, but I don't do anything about it. So now you're just compounding the problem. And I guess that follows into the next one. So I've decided that I have a problem, but I'm just going to ignore it. It'll go away, right? Money problems go away, don't they?
Yes, exactly. And then, of course, I finally decide I got to do something, but then I'm rushing off to your friends, the debt consultants or something, and paying huge upfront fees. And
again, bad advice.
Yeah, and what you just said applies to all kinds of problems.
Right.
If you have a medical problem.
Bring it into me, right? So you've got the check engine light comes on in your car. Mm-hmm. Well, it's pretty hard to avoid the light. It's there.
Yeah.
And if you don't do it, there'll be another light soon.
Right. But I had that one time back in the past where the light came on and it was a faulty light.
Yeah,
so it wasn't really a problem. But then there was the other time my engine blew up. So you don't know. You're probably better off consulting the mechanic or the doctor or the licensed insolvency trustee.
Find somebody that knows more about the particular issue. Now, half the people that contact us, actually, they get some good advice and they move on. So they're not at the point where they need to file. That's the kind of solution that you're looking for, right? If you call us early enough, you still have options. If you delay, you avoid, you ignore, things are only going to get worse. Absolutely right. So if you have these problems, you can go to hoyes.com. It's easy to spell because it's my name. Hoyes.com. We got all sorts of resources there. Budgeting tools. We got the Joe Debtor study, so you can see that you're not alone in this. We offer free consultations because it's the law. Right. We're not allowed to charge you an upfront fee, so you can come in and talk to us, and we'll explain what the different options are. But you know what people are doing now? I've been told they're using AI. And that's how they're finding. So it's not Google anymore. It's going to AI and say, I need help with a consumer proposal.
Yeah, at least every day, once I get someone say, yeah, I went on to ChatGPT or one of the other ones, and they suggested that a proposal would make sense, and they suggested you. Fantastic. AI is wrong a chunk of the time, but
not in that particular case.
It points you in the right direction, and then we can walk you through the answer. So my final comment is this: making mistakes is normal, because we all do it.
Right.
But the sooner you can course correct, the sooner you can get back on track.
Mm-hmm.
Kind of makes sense. So there you go. That is our show for today. Mistakes happen. Don't beat yourself up over it. Work out a plan to deal with it. Next week, we're going to talk about some mistakes you can make running a small business. I bet you taxes are going to come up on that discussion.
Probably not payday loans.
No, probably. Well, there's who knows. And we're going to talk about mixing personal and business debt. So definitely, if you're interested in that, subscribe, hit the notification button. Doesn't matter if you're on YouTube or one of the audio platforms. You will be notified of all new episodes, which happen to be released every Saturday morning. Did you know that?
I did know that.
So until next week, thanks for listening. I'm Doug Hoyes. That was Debt Free in 30.